All right, this is Market Pros, and I have a return guest today, and that is Jack Gleason. It was just back in August when the market was coming apart, and Jack came on the show, and he made a bold call, and I challenged him. So far, he was right. This is Jack Gleason of MajorLeagueTrading.com. He's a futures and options trader and mentor. And Jack, welcome back to the show.
Hey, Steve. Thanks for having me.
All right. Well, I'm glad you're here. So what was back when the market was coming apart? The S&Ps fell in a panic to about 1860. And at the time, you made a bold call. You said that was it. You didn't think that the market would go any lower. You said if it did, that wouldn't be good. It actually did test, but it didn't really break those numbers. And you had a target of 2263 after that on the upside. And it's been going in that direction ever since. I completely disagreed with you on that call. And so far, you are completely right, and I am completely wrong. So I want to talk to you about where you are right now. Where do you think the markets are going?
All right. Thanks for that interview. Well, even a broken clock is right twice a day, so, don't give me too much credit on that call. But what I want to talk about, and if you don't mind, I'll actually share my screen here, and you guys can visually see where I got that 1860 level from and what
Please
I'm
do.
looking at. All right, so I'll set that up here.
So you're sharing your charts, which are the ones you look at all the time.
Yep. So this is my main grid that I look at. Obviously, it's just an ES chart right here, and I'll look at the ticks as well on the left-hand side of my screen. But what you're looking at in the S&P 500 and where that 1860 level came from is actually the highs of 2007 drawn to the highs of 2015, 50% retracement. That gave us an 1860 quarter, to be exact.
That was right on the button.
Right on the button. And I'm a firm believer that there's large institutional buy programs on certain Fibonacci sequences, and this was one of the levels I was actually looking for. If we go back into an October, the October sell-off of 2014, one of the things I noticed and how I knew this level would have potential buyers is that even though that 50% retracement was front run here from the highs of 2007 to the highs of
What does front run mean? Somebody's going to ask that.
A front run is when a level does not trade exactly down into, so I have 1800s there and say we trade 1816. That is, to me, that is a front run when their orders are filled in front of the level you are looking for.
I see. So it doesn't get quite to the level you were expecting.
Exactly. And so that gave me an upside target of 21.15.5, and you could see that's where a lot of the selling pressure came from consistently. You can see by looking at these monthly candles, there's a lot of selling pressure on that negative 23. To take that same anchor, which is just taking that high and then drawing it to the new high, that gives us the 1860 quarter, which was, like you said, right on the button. And I expect that 2263, which is a negative 23% projection of the highs of 2007 drawn to the highs of 2015. And just like there was selling pressure at the 21.15 half, I expect when it is reached that 2263 to be a very hard level to get through.
When it is reached, man, are you ever confident? So that's your. So if you were just looking at the short term now, where are the levels right now that you think are the big issue?
Okay.
Or your targets?
Let's go to a 90-day hour chart, and for those of you who have Thinkorswim, you'll be able to view this. On the shorter time frame, there's always a fib sequence that exists. Coming out of that touch, you could see it was an 1861 low on September 29th, I believe, in the after hours. We had begun the rally we're currently in, and so actually, let me go to a 4-hour chart because it'll be a little bit clearer. So I'm gonna go a 90-day 4-hour. Coming out of that level, and I'm actually going to get rid of these volume bars because that'll make it a little clearer as well. Coming out of that low at 1861, there was your first pullback here in the 50 to 61.8% range. And you can see the candle opens and closes on the 4-hour chart.
And you can see the inverted head and shoulders there.
Exactly. So you got a head, shoulder, neckline
Right.
break. So there's a confluence of patterns. That blew out. I call this a blowout of a target when it goes past the negative 23 and the negative 61. When a blowout happens in my sequence, I then take the high to high and look for a 38 to 50% pullback. So we'll go over that next. We pulled back 38%, traded into the negative 23% profit target, and then it's a same anchor, new high. We pulled back once again 38%.
Okay, so this is what happened. Tell me what's going to happen.
So what's going to happen, and I can go over that right here, I'm going to go back to the I was just going to follow the sequence into what we're currently at, but it is a similar sequence, which is the high before breakout to high. So if you actually draw the anchor for the fib is 2031 half. And if you draw that to this first high, we traded into a 50% retracement, came up on that FOMC news, same anchor, new high, traded to the tick, came up, completed our negative 61.8% profit targets at 2108. You can actually see that that is the highs of the market. That same anchor, new high, is what we are sitting in right now. Okay, and what we just retested this morning, we're getting above the open here. This is what's currently going on. My hourly targets, give it about 2 weeks, 21.28 half is the negative 23% profit target of the current sequence I believe we're in.
All right, that's cool. My upside target, by the way, is around 2109 to 2129. So that's what we're looking at now for the short term for me, but I think it's going to fail from there.
Very well could.
Yep.
There's a lot of resistance up at those levels, so in order to hit my 400-point target somewhere next year, we do need to get through that.
So, all right, that's great. Thanks for showing that. I'm sure that everybody's going to have a lot of questions about it. Of course, you're the Fibonacci expert, along with Carolyn Borden, who's been on this show. So you come on back here, Jack. All right, there you are. Okay, so we have all of the stuff that you just shared, and it looks to me like there is likely to be a test of those highs. That's exactly what you're looking for and for what I'm looking for. So at that point, I would say that there's a good chance that the market might fail there. What will let you know that the market failed?
So in order for me to determine a daily failure at this point in time, I would need to see if we got a close below, just based on the current price action we have, a daily close below 2070. If we were to just close our eyes and say right now that's what will happen, I would then anticipate a full move back down into the previous highs we broke out of near 1980. And at that point in time, I think the market would, then begin another large level of consolidation and decide which way it's going to break.
By the way, you might notice behind me it says Market Pros. It used to say last time you were here, Emerging Market Pros, but that call was so good I upgraded you.
That's hilarious. I did not notice that, but thank you for pointing that out, and I feel honored.
Yeah. All right. That's great. So right now, my target is actually a lot different than yours. I'm still looking for a market failure. You're looking for the market to have resistance up at that 2129 area, maybe pull back and go through, correct?
Yes, that's correct.
Okay, great. So you have a trading challenge going on now in your trading room. Is that right?
That's right. I have created a challenge. I wanted to start off with a small amount of capital, roughly $3,000, well, exactly $3,000, and see if I can turn it into $10,000 in a period of 2 months. Just started this challenge 2 weeks ago, and I've been trading live in front of my room, so I show the order execution. I like to kind of educate people on the intraday trading. It's very small time frame trading style. I take 4 to 8 trades a day. And my goal is to kind of show you how I think as a trader, what I'm looking at, and really just provide as much transparency while I educate, and at the same time, hopefully hit that goal. We'll see if we can make it happen. Right now, I'm up roughly $400 2 weeks in, and I've had some swings both ways, but looking forward to continuing it.
That is a pretty tough challenge that you asked yourself to get all of those gains in a short period of time.
Yes, it is. Very aggressive.
Well, thanks for coming on, Jack, and we'll have you on again, and we'll see how this market acts as it gets this rally going a little further, and we will then check in again in a few months.
Thanks for having me, Slim.
All right, take care, Jack.
Later.
All right, that was Jack Gleason, and we will have him again sometime in the future, and we'll test out how good his Fibonacci retracements and Fibonacci projections are. That is it for our Market Pros.
Well, I'm going to sit and I'm going to do a steady show.